All right, what's up, guys? I hope you're doing well. James here from jamesdforsythe.com. And with regards to the title, in terms of the jaw-dropping stat, right? I didn't. I mean, it doesn't come as a surprise for me that there was such a discrepancy per se between banking and stuff when you hear all this conversation on financial inclusion. But I didn't realize there was such a discrepancy between kind of the unbanked population for like Native Americans in terms of in native land areas. And this is all with respect to the Community Reinvestment Act. Um, and directly, I got this stat from a speech done by Vice Chair Lael Brainerd. Um, so when she's not talking about central bank digital currencies, it seems like it's some form of financial inclusion, which I mean, so that kind of makes sense why that's always financial inclusion is always kind of a major perspective whenever, I don't want to say pushing, but talking or discussing central bank digital currencies. With that said, I'm going to head straight into the screen share and really get into the speech and the stat itself, right? And then I'll make this bigger for you guys. Okay, so basically in May, for this Community Reinvestment Act, there's really three entities that are really kind of working together to make this happen. And this isn't the actual act itself was passed in 1977, if I remember correctly, but this is more of reforming it in general. And this speech is specifically for Native American populations, like in native land areas. So those three entities are the Federal Reserve, obviously, the OCC, the Office of the Comptroller of the Currency, and then the FDIC, Federal Deposit Insurance Company, or Commission, corporation, I think technically. But anyway, it's a unified proposal to modernize the Community Reinvestment Act and the regulations. And so she describes this as a once-in-a-generation opportunity to strengthen this act, to bring greater credit, investment, and banking services to communities that have faced the greatest challenges. So, for the first time, the CRA, Community Reinvestment Act, will provide powerful incentives for banks to make investments in communities that do not have access to branches, such as native lands, right? And so, at least there are incentives per se. I don't know exactly, or we go into a few of the things they're exactly wanting to do, but then again, it's just a speech, not the actual act itself. So, even with the implementation of the CRA and other complementary laws, tribal economic inclusion is hindered by a lack of banking and credit access. So, this is where we get into the stats. So, as of the most recent 2019 data, over 16% of Native Americans are unbanked. This is 3 times higher than the rate for all U.S. households. Okay, which that one's not so much surprising for me is this next one saying as of 2021, majority Native American counties have an average of only 2.5 bank branches, less than 1/10 the 26 branch overall average for all counties nationwide. So 26 branches in a county is the average, right? And so for majority Native American counties, it's literally like an order of magnitude less, which I thought was surprising, like that there was that much of a discrepancy, especially by an order of magnitude, right? So the interagency CRA proposal was informed by consultation with Native representatives through roundtables, listening sessions, meetings, and comment letters. Indeed, they did take some of their feedback from the comment letters to develop the native land area sections for the proposal. So at least they're listening to them and actually wanting feedback. So some of the actual changes, like the proposals that would be made, would be the proposal provides greater incentives for community investments in native land areas by providing enhanced clarity and specificity about what activities qualify for CRA credit. And these kind of gives them 4 different categories specifically in which they're trying to improve, which would be revitalization, essential community facilities, essential community infrastructure, and disaster preparedness and climate resiliency, right? So those are kind of the 4 areas per se that they can get, I guess, increased credit, or I guess lower requirements. Basically, where banks are incentivized to lend for those reasons to native land areas, right? And so they also provide clarity for Native community development to financial institutions, which has yet another acronym. So CDFIs, which is Community Development Financial Institutions, and then there's also MDIs, which is Minority Depository Institutions, right? And so they're recognizing both of these as critical players for supporting credit access and investment in Native communities. The proposal provides additional certainty that activities with Treasury certified CDFIs will qualify for CRA consideration, and provides greater clarity to banks on receiving credit for activities with MDMIs, right? And so I guess just providing more institutions for them to actually be able to do stuff. Specifically, bank branches would, I'm assuming the bank branches, and going back to the statistic where it was like an order of magnitude less for majority Native American counties, would mostly be these MDIs, the minority depository institutions. So I'm not sure, because I mean, depository institutions is basically a banking branch, right? You deposit money there. And so, yeah. Okay, so some other proposals. So they propose evaluating the impact and responsiveness of a bank's community development activities through a series of special qualitative factors, with activities benefiting Native Americans as one of those specific factors. Right, so that's one of the factors. I'm not quite sure what the other factors are. Probably have to go through the act itself, or maybe there's some other paper, maybe linked in the references. There's a few of them in here, like an FDI survey, and then Brainerd's paper on financial inclusion and such. I guess, you did one specifically with tribal leaders, which seems to be kind of right up this alley, right? And again, you can always get to that in the bottom of the webpage. So, in addition, now that banks conduct significant lending and investments outside of their branch networks, it is important to ensure CRA accounts for these different business models. So again, just kind of wanting to incentivize banks to lend more to these kind of native land areas, whether that be, I don't know, if it's going to be some form of kind of insurance, kind of like maybe an FHA sort of thing with housing, to where it's basically the Federal Housing Authority insures those mortgages. They don't provide the loan. It's just they insure the loan. And that's part of the reason why you also have to pay a lot of mortgage insurance. I think it's called PMI for anything less than, I think it's a 20% down payment, but that's going something else. You have to insure it to some degree, right? And then the FHA insures it on the other side, so that the bank will actually get paid in case you don't. Maybe it's something like that with what they do for loans towards, I guess, Native Americans in native land areas, right? And so finally, the proposal would continue to emphasize a bank's performance in the local communities where it maintains branches regardless of their performance in other areas. So I guess just keeping those branches separate and not looking at it as as the bank as a whole in terms of like all the branches, and then kind of evaluating from there, maybe keeping the branches kind of more specific to these areas, and evaluating them on their own, and probably being more lenient, because I'd assume the reason why there's not that many bank branches in those areas to begin with is because, I mean, there's no kind of, I guess, free market incentive for the banks to be out there, right? Maybe it's not as profitable, whatever it may be. The banks the locations are secluded, or whatever the case may be. For whatever reason, there's not a kind of, like I said, free market incentive for the banks to already be there. And so by basically not really forcing them to do so, for banks to move out there or have some branches out there, I'd guess or at least I'd assume the banks out there would not perform as well. So it probably include having lower other regulations or requirements for them to be considered okay, I guess. Um, So, in addition to assessing a large bank's retail lending and community development activities in each facility based assessment area, we also propose to evaluate whether banks have branches in low income and moderate income census tracts. In particular, the agencies proposed providing positive qualitative consideration if banks operate branches located in native land areas. So basically, I guess having a positive bias towards those branches regardless of their performance. And so just because, and that's kind of, I could see where that would be an incentive for what they think or how they're describing financial inclusion in general. In the sense that's kind of more of the purpose of putting the banks out there is not necessarily just for business reasons, right? It's kind of public policy. So in a way, it's kind of subsidizing them, not necessarily with like giving the banks funding or um, I keep forgetting the word like for like tax incentives in a way. Um, I don't know, but basically having a positive skew is, I guess, is how I would say it. For the banks that are going out there. So just because they're operating in those native land areas, they're kind of looked in a more positive light with respect to their actual operations. So maybe that's one possible way to actually incentivize um, banks to go out there, right? So yeah, just an interesting speech that I came across this morning while I was looking around. Um, but yeah. Anyways, I'll put the link in the description so you can read it yourself. And I'd love to hear you guys' comments on stuff because I'm not as well versed with the Community Reinvestment Act as I am per se like the Federal Reserve Act itself because I've actually read that one somewhat in depth and some analyses as well. But yeah, definitely an interesting stat with in terms of I didn't think it was an order of magnitude less in terms of the bank branches in majority Native American counties. So, anyways, I just thought that was interesting and I thought I would share. So, anyways, I'm gonna leave it at that. So I hope you guys have a good night and I will see you on the next one.